Let's discuss something that may not be on the forefront of people's minds, and that's the single penalty. Okay. So we just talked about how the debt relief was made available to single filers with an income cap of $125,000 and married filers with an income cap of $250,000. 250,000. Now, assuming that, a married couple doesn't have children, I can see how expenses for the household can get pretty steep. But I'd also say this really sucks for those of us that are single. And I want to explain this for those of you that really don't file taxes, or, you have your taxes filed by someone else. This is the tax rate table for 2022, meaning when we get ready to file our taxes by April of 2023, these are the tax rates that are going to apply. Now, let's take an example. Let's say you make, as a single person, $100,000. That's your taxable income for 2022. Now, the way your tax rate is applied, the first $10,275 of that 100K will be taxed at a rate of 10%. All right. Then the amount between 10,276 and 41,775 will be taxed at a rate of 12%, and so forth. And so the amount of your income between 41,776 and 89,075 will be taxed at a rate of 22%. So the difference between these two numbers will be taxed at a rate of 22%, and so forth. And for 100K, the difference between 100K and 89,076, which is about 11 grand, will be taxed at a rate of 64%. And if you calculate that, the effective tax rate is probably like around 20%. Forgive me, I can put the breakdown of this tax calculation in the chat afterwards. But essentially, it's a staggered payment. And so if you look at this, and so we're talking about a $100,000 salary. So at the end of your tax bracket, you have been charged up to 24% of your income to taxes, to federal taxes. All right, so let's just say you're paying $20,000. Now let's look at a household that has a taxable income of $100,000, and let's see what they have to pay. Now, up to 20K, from 0 to 20K is taxed at a rate of 10%. From 20K to 83K, 550, it's taxed at a rate of 12%. All right, so we're already starting to see the discrepancy here, where a greater proportion of their income has a lower tax rate. Okay. And so finally, from 83,551 to 100K, they will be taxed at a rate of 24%. So their final tax rate is 22%, whereas if it's a single person, their final tax rate for the last part of their income that's in that bracket is 24%. I will break down both of those scenarios in the description box a little bit later after the live stream. And so what ends up happening is, year over year, a married couple pays a lot less in taxes over time. If you invest the money that you would have saved, by getting married, that difference is quite a bit cumulatively. So even though a married household has different expenses, they're penalized a little bit less than a single person. So when it comes to the student debt relief, I will say I'm a little bit disappointed. And I'm always disappointed in this single penalty because just because your lifestyle and the choice of whether to partner or not factors into how much money you have to pay to the federal government or how much you have to pay back in terms of student loans.